Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Hi and welcome to StockInvest.us and this summer version of our podcast. It is week 29, and in this podcast I will tell you that last week was the worst week for my portfolio, which we've been following since Christmas. I will also tell you that we were spot on the Apple analysis. Apple came in just on target. You also hear that we were still far off on the crypto. And last week I said there was a fair chance that the markets would be green. But Nasdaq, after 5 weeks of gain, Nasdaq finally had that red week last week. But it was all within the normal. As I said, there was a fair chance that the markets would go down by the end of the week and that we are heading into a sort of correction very soon. We will start this podcast as we usually do, just looking at the market. Then we will go to the some big stocks, do some quick analysis and end with the portfolio. And last week was not a bad week. Nasdaq fell roughly around 1.87%, while Dow Jones fell only 0.5%, so nothing really bad. Nasdaq closed at 14,427 points, and Dow Jones at 34,687. I've been saying over and over again that we are heading into a last rally, that as soon as Nasdaq was able to break 14,000 in a proper way, that we would just head upwards. I was not sure if it will be topping out at 15,000 or 20,000. One of the things that we can look at is, of course, buy signals across US and across the world. It will give us a sort of ID. And one of the reason it will give us an idea is if we are in a situation where the markets are high and there is too many buy signals. Usually then you get into an overheated market and you can expect these corrections. The other thing is, of course, there can be major events causing markets to fall. I don't see any major events neither this week. Usually I speak a little bit about possible big conflicts and things that can scare. What we see right now is, of course, the Delta virus. The Delta version of the virus, COVID virus, is spreading, and it puts a toll on markets and optimism for reopening of society. And one of the places where you can see the effect of the Delta virus is actually in the 10-year Treasury yield. Inflation in the United States is going up, also other places in the world, of course. But over the last 12 months, the US inflation is now above 5%. Actually, it's 5.4% over the last 12 months, and that's the fastest growth in the inflation since 2008. I told you this would happen, and I can tell you that it will get much worse than this. 5.4% is above the targets. The economists were saying that it would top out at 4.5%, but we are already almost 1% above that target. And as we can see, raw material prices, food prices, everything is just indicating that we actually may, in worst case, hit above 2-digit inflation. I can tell you the inflation will come. It will be super hard and it will give a huge toll on the market. It's just this timing. When will it happen? So why doesn't the market react to the inflation as it usually should do? We should see it in the 10-year Treasury yield. It should be raging high already, but it doesn't. Instead, the 10-year Treasury yield fell a little bit last week, and that is because half of the investors actually expecting that the federal banks have to go to zero interest rates again, maybe do other incentives to keep the economy going, and that would also cause the Treasury yield to be low. The thing is that the more money you put into the market, the higher the inflation will be, and you will get caught in a catch-22. It will be very interesting to see how it will solve out, in which way things will solve out. I got a bad feeling about the way things will turn. It's just a matter of timing. Exactly when will it be? I told you last week also, I've been telling you for a few weeks, that at some point OPEC is going to increase the oil production, and last week they announced it's exactly what they would do. The high oil prices been above $70 for a few weeks now, is way too high. And of course, at some point they want to make even more money, and the way to make more money is pushing more oil out in the market while the prices are still high. This took a little toll on the oil price, which fell $4 last week and is traded now around $71. I expect oil to continue a little bit downwards, and for those who've been following me for a long time, you know that I have oil portfolios, and I actually started to reduce my exposure in oil related stocks simply because I have such an amazing profit in these portfolios, and it's time to reduce the risk a bit. Gold, which also measures inflation in a good way, is unchanged at $1,805. But I am pretty sure that we will see gold back to 2000 and even higher as time progresses. Last month, the inflation itself was 0.9% and way above target, and actually almost at record levels. So we will see how it will go, but if you haven't noticed, you should notice anytime soon that when going to the shop, prices are up. Groceries, gasoline, woodworks, eventually steel, computers, everything will just increase, and it will increase at a faster pace as time goes. So where does that leave us? What about the market? Well, one of the things that we can look at is signals across the world. And at StockInvest, we look at our buy, sell and hold signals for more than 34,000 tickers. And right now, only 22% is giving buy signals, and this is very low. And this gives me a little bit of optimism. Actually, there is twofold things that can happen. The one thing that can happen, of course, is that like in overbought, when markets are getting oversold, you can have strong reactions down before it stabilizes. So there's a fair chance, based on what I just said, that the market can have a very red week now. At the same time, the markets are not overbought, so having a slight reaction now is not the worst thing. And I don't manage, looking at all these charts, I don't manage to see that reaction comes right now. I see it coming for the big tech stocks, as I will tell you in just a minute. That Apple and Microsoft told you last week that maybe not last week, but for the week ahead of us, we should see reactions down into the big companies like Apple and Microsoft. But I don't see it for the market as whole. Nasdaq 14% buy signals is very low. I don't think I've seen that as long as I've been speaking to you. It is extremely low. And last week was, of course, big tech stocks doing very well. Most other stock fell. But when there is too much pessimism, it will only turn to optimism, and I think we are at that point. Will it be this week? Will this be the sell-off week? Will it be the week where it turn? I haven't made up my mind yet. New York Stock Exchange 19% buy signals, London 24%. Very interesting. Shenzhen in China is now the highest at 34% buy signals, Tokyo 27%. And if we jump over to Europe, we see that London and Frankfurt is at 24 and 25% buy signals. The buy signals is measured in percent. It can only be 100%. And if we go way back to January, when everything was up at 45, 47, even above 50, I think New York Stock Exchange was even touching 60. I told you it was way too high, and a reaction down is coming. Now I see the opposite, that things are starting to get very low, and I would expect things to continue upwards. But also when things are overbought, they can go far in oversold. So it will be such an interesting week to see. The first things that caught my train of thoughts is that we will have a horizontal week, that it will just be very slow. Markets will be undecided, moving sideways. The other thing that was, of course, that what happens when Microsoft and Apple correct, because they should do. But the thing is that money flows. They will just sell and flow into other stocks, unless there is a reason to pull it out of the market. And I don't see a reason yet. I don't see this week the reason to pull out the money from the market. So I think they will flow into other stocks, and that we will see companies like NIO, even Tesla and other have a far better week than Apple and Microsoft. And why not? Let's start straight on the major stocks. Last week I told you I believe Apple would end at $147. Apple ended at $146.39. And if we look at the Apple stock, it is all, like I said last week, we are on top of the trend. Everything is indicating that the stock should react down. And I said that by the end of the week, we probably will start to see the weakness. And we do. Apple topped out at $149.15 and was falling for the last 2 trading days. Right now it's sitting on the support levels around $145. Plenty of support in this area. What I do like is the volume is following the stock. It's a very good sign. With the support below, with the resistance at 150, the idea is that the stock will move somewhere between 145 and 150 for the week as such, unless something special happens. At the same time, the relative strength index is still very, very high. The stock is still in the upper part of the trend. Yes, there is a buy signals from the short-term moving average, the long-term moving average, but there will be a sell signal if Apple fall below today's level. There will be a sell signal from the short-term moving average. So I think that the law of nature and the usual movements within trend will affect Apple, and that Apple will push below 145. I think that we will see Apple maybe as low as, worst case scenario, $135 during the week, but I think the low will be around 140. I actually think that will also be somewhere the level where Apple will close by the end of the week. So we will not dig that much further. You can check up the chart yourself at StockInvest.us. Type in the ticker Apple, AAPL, or write Apple, and you will see for yourself what I mean. And when we jump to Microsoft, you will see just the same thing. They follow each other, and as I said last week, I believed Microsoft would do better than Apple, and Microsoft really did it just continue upwards. It didn't. I said I believe Microsoft may be able to hit as high as $290 intraday trading, but end of day trading, Microsoft got up to $282 before turning down in the end of the week, just as expected. And I think that, as I said in Apple, Microsoft is also in the top of the trend. It's overbought on the relative strength index. The thing that really differs Microsoft and Apple right now is that Microsoft, the volume is in divergence with the price. So the volume actually rose while the stock fell slightly. Usually a sign that more bad is about to happen. And if I'm not mistaken, there will be earnings reports from Microsoft coming out today. This will push the stock in either direction, and usually it will push with a certain amount of percent. You can also see this under earning reports at StockInvest.us. For the last 3 quarters, Microsoft increased at release day, but in Q1 2021, last quarter, it actually fell by some $5-6 on the releasing day. And I think that we will see just exactly the same thing this way. 2.83% Microsoft fell on the release day last quarter, to be exact. So I think that will be what we will see, and in most cases after release anyway, Microsoft have a red day or two. It's the most typical reaction. You can see this earning reports on our page, Microsoft. Just go to Microsoft, find the tab, earnings report, and you will see for yourself. So I think Microsoft will fall, and I think it actually will fall harder than Apple. That's my opinion. Support where it is today, 280, later support at 278, 272, 265, 260. I think that we will get maybe as low as 260 all the way to the bottom of the trend before the stocks pick up. I don't think it will be the first day reaction. It should just be a slow week as such. But for the end of the week at Friday, we try to put this Friday price. I think the end price will be somewhere around $271. So that will be the target for Microsoft. And for Microsoft and Apple, please remember that it's in a rising trend. And as I said last week, these are just total natural corrections. It doesn't indicate that things are to turn really bad anytime soon. For that to happen, it's still too much support under today's level. So I don't see things happening fast. There's nothing telling me that there will be a super crack right yet. Actually, everything tells me that we'll have a natural correction, and then things will continue a little bit more upwards for as is. Buy signal from the short-term moving average, long-term moving average, but if Microsoft are fall today, it will be a sell signal from the short-term moving average. And as I said last week, Microsoft is overbought on the relative strength index, and usually this causes stock to fall down. Next one is Tesla, and Tesla did not perform as I expected last week. I kept my target for $710, which I've been holding for 3 last week for Tesla. Tesla ended the week at 644. The week was red, also causing Tesla to fall down. But right now Tesla is at 40 in the relative strength index, is very low. Volume is following the stock. It's a good sign. And as I said, it could be that it had to push downwards to the 620, 630 level, but it finds a lot of support before it pushes up. Buy signal from the long-term moving average, sell signal from the short-term moving average. Very good support at 620, and I think this is exactly what will happen. Stock will now start to push upwards again, but it will face resistance at 660, 680, later 720. So all these levels will be levels which the stock will struggle a bit to break through. If it managed to break 680 this week, I really don't know, or just move sideways, I'm pretty sure that it will push upwards to these levels for sure. But I will be as bold, since Tesla now is as low as 40 on the relative strength index, volume following the stock, just like it should. I think that we will have a good week for Tesla. I will just keep my 710 target. Not sure if it will reach it, but we should see Tesla continue to push upwards and trend for a trend change, meaning that once it starts to break above 700, we will see this clear new trend in Tesla. Nothing very scary as I see it right now. GameStop was a new ticker that we brought in, changing with Amazon a few weeks back. Last week I had a hairy target for GameStop, which never actually happened. I said it was a fair chance that GameStop would move upwards based on the situation last week. Instead, it did the opposite. It fell the first 2 days, fell very hard, and went slightly upwards for a few last days. Currently being oversold on the relative strength index with only 16, which is very low. Usually stocks have a strong reaction upwards when they are this low on the relative strength. It happened to GameStop before. Not half of the times it only had a short reaction. One time it had a huge reaction up. Not sure if it will be a huge reaction right now. Sell signal from the short-term moving average, sell signal from the long-term moving average. The volume is not following the stock as it should be, causes the idea that we will see a more horizontal movement for GameStop this week, somewhere between 160 and 200. Very strong support between 140 and 160 from previous trading. Back in April, May, it was moving sideways between 140 and 160, and I think many are thinking these as possible good levels. My first guess is that the stock should push upwards to $210. That will be the high for the week. The low would probably be somewhere around 160. So between 160 to 210, that's $50. It should move, but by the end of the week, I believe GameStop will end somewhere around $190. This is a volatile stock, so it's a little bit more interesting to follow. The last two analyses before we quickly jump into my portfolio will be Bitcoin and Dogecoin, and I've been positive for crypto over the last few weeks. I think they are at the bottom as is. But Bitcoin really struggles breaking upwards. It's being held around the 30,000+ level, ending Friday at 31,500, which is far below the target of 40,000, which I've been keeping for a few weeks now. And if we look at Bitcoin, we can see this in the chart. The biggest problem for Bitcoin right now is that it's building up a lot of resistance above. Makes it even harder. But again, the relative strength index is super low, and I think it's just a matter of time. Hasn't happened yet. It can still be that it will just slightly move slowly, boring sideways or slightly down. Could be. But my $5 go that it will push upwards. But the huge resistance above between 35 and 40,000 will make it very hard to make that jump in one single day or even a single week. Right now, it seems very hairy to keep 40,000 as a target because there has to be some very, very, very special news to push that high. It's a sell signal from the short-term moving average and the long-term moving average, but these will quickly turn into buy signals if the crypto just moves slightly upwards. Our systems at StockInvest.us uses algorithms to calculate every possible thing it can see in the chart and the prices. Currently hold Bitcoin as a sell candidate with a score of -2.24. Been holding Bitcoin as sell candidate since June 16. It's down 17% in this period. I know because I was building these systems. I know when they will start to turn upwards, and if Bitcoin just managed to keep a few more days around current level, you should see also automated algorithms start to change their opinion on how Bitcoin will do. I will keep positive for crypto, that it should continue upwards. But also please note that if Bitcoin falls below 30, it can fall very, very fast to 20,000. Has to do with psychological levels, 30,000 being one psychological level, and trader will lose confidence if it falls below. Right now, they are just thinking the same thing like I, that it will bounce upwards from this support, and it's a good buying opportunity, but they will throw their cards if Bitcoin falls below 30,000 with the expectation that 20 will be next. Fair chance that might happen. That is called trading. You should be aware of it. So that's the level that you want to consider your stop loss, just under 30,000. Do not be fooled and think that these things cannot happen. Just because I am optimistic to Bitcoin doesn't mean that I will bet my life on it. I just think that it's a good chance as is, but things can flip fast. So will I keep the 40,000 level or will I not? Well, given the fact that Bitcoin again is oversold on the relative strength index with 30, Last time it was oversold, it's been popping up $5,000-$6,000. So $5,000-$6,000 for this level doesn't get up to 40, it gets up to 37, where we see a lot of resistance. So that will be the target that we will by end of week see Bitcoin at $37,000. But in general, I keep my positive view that it is levels where you can make profits. Dogecoin will be the last of the cryptos, and as I said, it can be a fun investment. I think current levels are levels which is very interesting. Super high risk, of course, no support below, but crypto is oversold as is, and I believe that just given a slight good change, could be some major news somewhere, and you will see all kind of crypto starting to push upwards. Of course, Bitcoin leading the train. It will not be Dogecoin leading the train. Our systems had Dogecoin as a sell candidate since the 7th of June, and since this period, Dogecoin is down 44%. So you can see how cold and hard these algorithms are, and they are usually very correct in their prediction. And Dogecoin is a sell candidate. It's a strong sell candidate actually. So I should just say that right now there is just a waiting game for Dogecoin, where it will slide slowly downwards. Last week's target was way too high. Dogecoin did not manage to push upwards, even though it was low on the relative strength index. Also last week, this week even lower. Resistance at 25 cents, 30 cents, 35, 40, 45. Every 5 cents up is resistance levels. Support where Bitcoin is today at 18 cents, and I think that this will hold and that there will be a somewhat positive week for Dogecoin. It will maybe not push as high as 35 cents, which is the target I think is very fair to reach, reasonable to reach. Could be that the 25 cent resistance during the week will be too hard, so moving anywhere between 15 cents and 25 cents will be the most logical movements. Ending the week, in my opinion, somewhere around 25 cents. So I will reduce my target a little bit and keep 25 cents as target. So to sum it up, what I said so far, major tech stocks are way too high up in their trends. Correction down this week is expected for all of the major tech stocks. I don't think money will flow out of the market. I think they will remain in the market. I think they will just flow to different stocks. I think NIO, Tesla, and some other stocks will see some gains during this week. That's where the money will flow, and it could even be that they will flow into crypto. For crypto, I think they are oversold, been oversold very long. At some point this will turn. It doesn't have to be this week. Things can get even worse before it turns. These things you cannot know for sure. I just think it's a fair chance that they will do. So I reduce my positive targets a little bit, but they still remain positive. That brings us to the very last part of this portfolio, this podcast, and that's my portfolio. And last week was a shitty week. I told you this is the high risk portfolio, and as I told last week, I was dead bored with the portfolio because it's not suited for a market which we have right now, where there is really not enough momentum. This high-risk portfolio is suited when things is a little bit more frantic and moving fast. And right now the markets is struggling with scares of inflation, scares of Delta, and also a political chaos around. Diffusion did bad. NIO not so bad, ending the week at $42.8, but I think NIO will just continue to do good. My favorite stock, Petrogeo Service, this Norwegian stock, also did not very well, ending the week at 423. But I'm still heavy in profit on that one. Arbutus was slow, 266, and Ur Energy fell all the way to 105. and for the fusion pharmaceuticals, for Ur Energy, even for Zoom and Okugen, all my stop losses were triggered. I have, however, re-entered at some different levels. Actually, I have increased my exposure in URG. It was sold at 129. I rebought at 117 and a little bit more at 115, so I managed to accumulate a few more stocks. As you can see, I should have sold earlier. It was 165 just a few weeks ago. But these are penny stocks, and this is the way they move. Velocity Energy totally dead, just a few shares traded now and then. Okugen at 666, the number of the devil. Well, it was the number of the devil this week because it was heavily down from last week where it was traded well above $7. But Okugen is the same thing. It just needs that little positive market before it moves. The biggest negative surprise for me is still Tencent Music. Has to do a little bit with how Chinese is treating Tencent Music with taxes. Also has to do a little bit with US trying to force new rules for Chinese companies on the stock exchanges. So it's caught a little bit, but it is a money machine and it's way undervalued in my opinion. But it doesn't matter what I think, it matters what the market thinks about the price. But so far it's way down and it's not really triggering stop loss level. I will keep Tencent Music a little bit more. Last stock that came into portfolio before Okugen was Zoom, and Zoom is just doing bad. It's 60 cents. But don't expect anything else from stocks like this. These are penny stocks. They need green markets to really move, or news. And from this portfolio, neither of the companies have given the right news yet. Been dead boring. But most of these smaller penny stocks, they used a really frantic market in November, December, January to get a lot of cash, secure cash at better price levels, issuing new stocks. But at some point they have to turn their PR and start publishing some good news. We will see. Anyway, as I told you, for those who've been following me for a long time, I have since January reduced my total exposure in market because I was expecting actually this. The final words for this podcast will be that I remain positive for the short term. I still think there will be a final rally before we are heading into somewhat a total disaster. Hopefully none of it will happen. But if you are new into the markets, or even if you are experienced, you can have some fun trying to read a little bit about inflation and this disruption right now between inflation and interest rates is very interesting. It's very few people that's seen that before, where inflation is going up, but the interest rates doesn't change. Most of it is related to the fact that people believe that governments will keep interest rates low to handle the Delta virus, to handle this pandemic. But what about inflation? How far up can it go before it becomes a real problem? You should see it happen slowly. You will see some small drips of news. Employers have to fire employees because they cannot keep up with their salary levels. You will see suddenly car sales starting to go down because prices is too high, and at some point the banks have to do some things, otherwise we'll get back to 2008. Very interesting in stock trading. It's about being ahead of the market. That's where you want to be. You cannot be correct on the timing. Yes, you can read on Reddit one guy that made 40% in a single day, but that's usually not how the market do. The best way to find some very good stocks to trade is scan through a lot of lists, read up on forums, because it has to do, of course, a little bit what people want to buy. You can reduce your risk by finding stocks which is at the bottom of the trend. I've been speaking about trend in Microsoft and Apple, and let the trend be your friend. Find stocks that are in the bottom of the trend because you can expect them to go upwards, and be a little bit careful with stocks that are in the upper part of the trend. This is called technical analysis, and at StockInvest.us we are all about technical analysis. I'm a technical analyst myself, love this. But I cannot deny fundamental fact, because the fundamental facts will change the big overview. So these are the things that you want to keep an eye on. Keep an eye on what's happening in the Pacifics. Keep an eye on what is happening with the Delta virus, etc. That could give you a slight idea of what you can expect forward. As usual, I will end the podcast wishing you a great week. I hope that you will make some good cash, that you will reduce your losses, use stop loss. It's a very good way to don't fall too deep, too hard. Use stop loss. Try to learn a little bit about the relative strength index, read a little bit about inflation, try to be ahead of the game. And hopefully, as I said, I hope you will have a great week, that it will be a good week on the markets despite whatever I say, and that we will speak again next week. Until then, have just a nice week and a nice summer. Bye.
That's the end of this video. Thanks for watching. Leave a comment if you have any questions, and don't forget to subscribe to the channel.